Good morning, world, everyone. Welcome to a new update of Crypto Michael. And the markets are super boring recently, which is annoying. Volatility have drained away. The overall sentiment from super ultra bullish has drained away to an accumulation phase through which we can conclude that if you want to take positions in certain altcoins, this is the period that you should be focused on them. And one of them is the one that I've got here on the charts, which is Zilliqa. We have been discussing this one on and off. We have been discussing that there is a likely retracement coming in after a parabolic move. And as you can see, the retracements take the longest period before a new parabolic move starts. But we are not retracing fully on Zilica as it has been in an accumulation range for several months and actually more than a year or close to a year, through which we can define levels that you should be aware of a potential bottoming structure or potential interest if you want to deploy a swing trade. But first, if you like my content, please subscribe to the channel, follow me on Instagram, follow me on Twitter. I'm posting content on cryptocurrencies on a daily basis, and I'm going to switch that more towards stocks and macroeconomic perspectives as well, so we can have some really cool content being built up here. But first, Zilica. Let's just deploy what we can see on Zilica in the chart itself. If we look at the weekly, just a healthy retrace from a very strong parabolic move up out of the accumulation range towards the resistance area, which we have seen previously. Accumulation range sideways period we've had previously, through which based on a weekly time frame there's a clear support area that you want to see sustain as support, which we did not get yet. We might be getting there, but that's the area that I'll be focused on based on a weekly. If we get to the daily time frame, we can also see that we've got similar levels here, and what happens in an upwards parabolic move is that the previous levels of support or order blocks are not tested, so they will receive a test later on. So in this case, we've seen a massive move in May on Zilica. We've seen that we've dropped down and we've got a test of the untested level, rejection at previous support, becoming resistance, another downward drop towards the block we see around 135, another rally up. Even took the liquidity above the high. I would not be in this position anymore if I would take the long here. I would probably be out at these two, but oh well. Even drop further down, support resistance flip, and now we are again looking at this support area, and we might still be getting a test of this level, which would be classified as one of the best entry zones that you could get. The spread previous level around 93 is the accumulation range high. We've already seen a test there, but as you can see, it's a very clear structure in which a parabolic move occurs, heavy retracement south occurs, and then as you also see in the previous movements, upwards is going very fast, downwards it takes months to accumulate, and that's what you see here is basically what we are seeing on a larger time frame. As well on Zilica and a larger scale, through which we can assume that we might be getting into an accumulation period and might be in for some nice swing positions on Zilica. Now, what do we see? We are currently in a resistance zone. We are seeing that we are making lower highs, lower lows, so the trend is down since the previous high. But if we conclude that we have regained the 142 support level in Satoshis, it might be likely that we're going to test the area around 195 to 200 sats. Does that mean that we're continuing from here? No, as you can see in the previous accumulation periods, it's very likely that we get a test towards 195, 200 to test this level, might be even towards 218, and then we get another drop down to get sideways consolidation, and then the next wave will probably occur in the beginning of 2021. Defining the targets through that perception is through Fibonacci extension, through which it is very likely that the next wave would bring us towards 425 or even 600 satoshis, which is a heavy move if you start to deploy swing trade positions on Zilica at this point. Fundamentally, still very strong project, still doing relatively well, but the overall sentiment is defined through price action, and price action is turning down, through which you can see that it takes a longer period before it starts to move again. Similar case we've seen with Lent, AV, heavy parabolic move and then a correction down until we see the new moves occur. Lent is a more wiki structure, but you can see that every time previous levels are tested before continuation occurs on this coin. Right now there's a downwards pressure, so if we lose the area around 4,500 satoshis, it seems very likely that we're going to test the areas around 36 and even 26 and get a longer accumulation before we can continue. But if you compare these two, you could state that Zilica is still in the area of the first correction after the first parabolic move, and there's still much more to come. So it's just all about taking those entries and accumulating them slowly. Another one that's also seen a very heavy move, Fetch, massive move up, and massive moves up also have massive moves down. And that's the case of altcoins, and that's why you should not deploy your whole portfolio into altcoins. So heavy move up, downwards drop, rejection, first bounce area obviously also defined through the blocks, further downwards drop towards the next level, bounce up, rejection, further downwards drop, and even drop further down than we were anticipating, but it's all okay. On support, the crucial area that I'll be targeting is indeed the area around 395 to 405 satoshis. Bounce up, this bounce is already almost 50%, but we are facing a resistance zone through which I would definitely be taking TPs here. If we do get a higher low around 560 sets, I think we might be even getting one more wave up, but overall accumulation sideways range seems very likely before we are going to get the new wave up. And if I'm not using Fibonacci, I think the next rally would bring us towards 2200 satoshis, and indeed it will. So it's all about bringing those swing trade positions get ready for a potential trade. One of them is even showing some more impressive strength, which is TomoChain. We've classified that we wanted to see support hold around 5200 satoshis, which is the case, and you see that if you have a move up, there is a clear resistance zone defined from the previous support level, and multiple altcoins are still ready to make such a move. For instance, Fetch is currently doing it, and Fetch is currently in this area. Tomo went down the road down the road some more already. Previous resistance becoming support, another move up into resistance zone. And if we want to deploy a position in Tomo, I would be definitely looking around the area of 8,000 satoshis and potentially even 7,000. Currently, it's just not an entry zone, despite the bullishness regarding the project. Fetch, as you can see, we are in the first move, through which we can define that if we want to see a support resistance flip of the 550 sets, that would classify a further move towards potentially even 900 satoshis. But given that we are expecting that the accumulation range takes a longer period, I would not be anticipating a further move on the majority of the altcoins. So your horizon is just a little bit shorter. Then there is some altcoins that are still not moving too much, and one of them is Harmony. Back to support levels, as you can see here. If we do hold the support here, it's very likely that we're going to test any of these levels between 60 to 63 satoshis and potentially even mid 70s. So then we get a move like this, and then we probably face down the roads again. If we do break 70 to 75 satoshis, I'm targeting mid 80s. But for now, you should be aware that accumulation phases take a longer period. The only difference we have right now is that we're going to construct a higher low on the markets after we have defined a higher high. So the next impulse wave will only be bigger than the previous one. That's my update for today. I hope you have enjoyed it, and I'll see you back tomorrow with a new fresh update. As today we're going to do a new workshop in The Hague, and we're going to do some articles and content on Twitter as well. Stay tuned.